All right, guys, welcome to essentially the follow-up case study to our entry from June 16th, and pretty much the continuation after that. So just as a small recap to our previous AU study, right, we discussed our entry. We discussed why this is probable, and pretty much as a very quick summary. Pretty much we got the reaction, internal break of structure, entry was here, but it was derived from the internal structural range, which confirmed bearishness, right? So pretty much, right, as a result of, right, our entry being confirmed, our entry being correct, we achieved target 1 in terms of swing, because this low is essentially the low that gave us the initial sign of optimism, where we were bullish for a small amount of time, right? Basically, once we achieved this solidified low on an overall scale, we took out our previous structure point. This was looking like it wanted to be a very, very bullish scenario. But unfortunately, after that, we got the liquidity grab, bearish structural range, and then the next structural range, which generated and gave us this move to the downside. Okay, so right, that has happened, right? And essentially our second target was based on H4, right? Essentially where a potential accumulation could have occurred, even though I don't really see it as accumulation. I more just see it as a trading range. So because this is also a confirmed solidified low, it's also another great target, right? Keep in mind, I like using higher time frame solidified points as targets, just because we could see a reaction after the clearance of liquidity. So that was also confirmed right off the bat, right? And that was pretty much the entire move, which was, I would say, about 200 something pips. Very nice. And very overdue, especially because we were in a range for, I would say, about since April, yeah, about 2 months ish, a bit over 2 months. So, right, because we did not have a liquidity grab based on this low and we continued lower, that confirms the continuation, right, that we are now bearish, meaning that we could be looking at a conversion based on high low retracement, continuation, right? And all we're doing now is catching continuations, which is a bit alerting, even though technically our overall range is still bullish. This could just be another pullback. So I'm trying to be cautious of, you know, these selling scenarios, because from a major intraday, potentially even swing perspective, this is bearish, but from an overall perspective, we are bullish. So who knows? We could even see this reverse within probably, what are we, July? Maybe within the next month, by the next quarter, maybe. But yeah, anyways, right? We have already taken out our confirmed low. We now have a second low, which is our next target, which is what was met, right? Because this is also another solidified low. Okay, so we have our target in place, and keep in mind, right, we didn't tap it, right, based on the first overall move to the downside, high low retracement, continuation, continuation, continuation. And this was the first time before we took liquidity, we started to create an upside move. So with volume being a bit iffy here, right, it's very obvious in my eyes that there is no demand present inside of this move, right, while supply has remained consistent. So sign number 1, not the biggest sign, but just something to note. 2, right, even though we didn't take liquidity out, this does leave relative equal lows, because this is not a mitigation. That doesn't matter what you tell me, that is not a mitigation here. So we have our target in place. It's a major point of liquidity. Now we just have to catch that obvious continuation to the upside, right? So based on this time frame, H4, right, we can see a very clear POI because this POI pushed price up to meet previous structure, which then led to the move to the downside. So what does that mean on an internal perspective? Right, all this means, right, from an internal perspective, is that this move pushed up, solidified low, and we met previous structure to create new lows. So we have character 1 and we have character 2. So realistically, I would not like to see this be taken out, right? Because that is where the character shifted. So if you want price to continue lower, I would expect it to keep the character that is in place. Anyways, right, inside of our H4 POI, what do we see? Right, I see push up, downside. Wick here mitigates that H1 indecision. Next, after that, order flow comes into this wick. So this wick is a reasonable POI, right? Because following order flow, right, there's push up to mitigate, and push up, which led to the move to the downside. So naturally, this is what is occurring as to why price is coming higher, even though volume is unsupportive. And as you can see, even from a momentum perspective, we have a much stronger push and a much more corrective push. So just makes all the sense in the world, in my opinion. As for what we discussed on Zoom, right, is that in order for us to reach up here, whether it's the H4 or the H1, doesn't matter. In order to reach up here, we need bullish structure, right? So obviously, right, we need to see a conversion in that in order to achieve any type of reversal. So this is something we noted on Zoom, and this is pretty much a very deciding factor. And as you can see, we reacted, wanted to push, but inevitably took out structure and took out the POI, final potential POI, in my opinion. So because that happened, this is now my confirmed invalidation point, right? And even if you would have caught a straight up reversal here, that's 100% okay if that's, you know, how your rules are set up. But and more important here to note that we created a bearish push, right? Obviously then we have a move to the upside, the pullback, and then a new continuation, right? But I do see this, right? I hate calling it noise, but that's really what it is to me, because this is happening right upon new week open, I believe. Yeah, new week open, right? Pretty much price spazzing out, right? So I'm gonna wait. I can't really, you know, even though this is technically mitigating something there, right? I don't want to force any type of trade, especially at that time of day. New week just opened, right? And if I'm gonna trade a Sunday, it's probably gonna be during London. So, right, even though that's happening, right, I do confirm that it as pretty much just noise, something that I'm going to avoid, and I'm going to let price show its hand before I take any type of opportunity. So what happens after that? We have the confirmed bearish bias based on the H4 and H1 refined mitigation, which confirmed a new structure break signifying a potential sign of reversal. So I'm going to wait for this to pretty much clear off, even though we created a bearish push, right? We do, right, try to reverse here. You can even see solidified low, but that failed. So technically, right, as we are taking this out, we're taking liquidity out as well. This is now a bullish liquidity grab. So bullish liquidity grab signaling to me we could probably take this out now unless we convert. So because we convert right here, right, I'm not going to consider that as liquidity, but I am going to consider this here as liquidity. Right, we have 1 high, 2 high, 3 high, and then a push up. We take liquidity and immediately break structure, signaling a bearish structural range and an internal liquidity grab, which confirms the bearish bias, and confirming this, in my opinion, as you could see it as unwillingness, you could see it as a potential lower high based on this entire push. But all I care to note is that we have an internal structural range based on an internal liquidity grab, signaling bearish continuation. So in order for me to take this entry now, right, I have to analyze order flow. Right, so there's two things that stand out to me. I have one POI here, and I have one POI here. Okay, so technically you don't know which one to choose, so we're going to fall into a smaller time frame. Right now, what do I see? Right, I see the retest of structure, which led to the downside move, and I also see a second potential candle of interest. 1 and 2. Right, so I split my risk, not necessarily split my risk, I'm sorry. I had two positions in place, right? One, either I get stopped and then I catch the real move, or I get a better RR and catch the overall move, right? So either I'll take the initial loss, right, or I'll take a smaller stop on the second position, right, to then give me, you know, an overall win. So after this is actually a limit because it was extremely late, so I just put the limit and go to sleep, put both limits, I'm sorry, and just went to sleep. And fortunately, you know, after the confirmed showing its hand based on internal liquidity grab and bearish structural range, right, we could see that the continuation occurred, but it only made sense because we already had the confirmation here, and we also had the confirmation here, signaling that I am following order flow based on the arrow. So essentially from there, right, what are my targets? Right, because, right, if you're thinking intraday, obviously you're gonna think TP1, right? But let's think of this from a theory perspective. We know we are bearish in an overall scale. 2, we have relative equal lows on top of being bearish, right? Meaning we have a target. 3, we have a confirmed mitigation and an internal confirmation, signaling that this is now the confirmation of the pullback, because this is technically solidified high based on, right, the overall move high low retracement, right? So because that's the case, naturally my target is the previous low. That is my first swing target because we are seeing a potential overall conversion of price, right? So it's only natural, right, that I have my TP1 there. But, right, I actually had my TP1 here just because I see an H4 solidified low, excuse me, right? And I had my TP2 down here because keep in mind, like I said earlier in the video, we are overall bullish, but our major intraday swing is bearish. So I'm more so trying to just make sure that I'm safe with exiting the trade, because I don't want to catch myself wanting to force a continuation when in reality we could be overall bullish and it could reverse on me at any time. So I'm trying to be dynamic. So as you can see, right, TP1, let me actually make an actual line. TP1 was already at 1 to 40, right? Because this is the entire continuation. but because we're already down here and we aren't pretty much reacting above the previous high, previous high here. Where is this? Right, I really have no reason to close, right? Because technically my bias and validation is here, right? Or this could be my final potential POI. So this would be technically a type of re-entry potentially. But fortunately, right, essentially from there, let me skip forward actually. Fortunately from there, we created an internal structural range, continued, right? Wanted to reverse here, but didn't. Liquidity grab, right? And then we met target, which was A1 to 50. And I think it's a very good trade. And this scenario here, let me actually delete all of this. Okay, so as you can see, we wanted to reverse here, right? And we even showed a potential movement to the upside. But this is why I want to stress continuations, right? We know where the liquidity is. We know where the target is. We know where bearish, we know where order flow is going, which is bearish. We know where structure is going, which is bearish, right? So you don't want to get caught up with smaller time frames trying to catch the reversal, because you're more than likely going to get burned. How do I know that? It's happened to me over the past pretty much for so long that I can't even remember, right? That's me trying to pick lows and going against structure, when in reality the continuations pay the biggest dividend, right? So that pretty much concludes the entire video. Just make sure to always focus on continuations and to justify your positions, or else you're merely guessing. And that's just the reality of the matter. I know a couple of you also caught this trade as well, and that's good to see as well. But yeah, with that being said, I'll see you guys in the next video.